As widely expected, the U.S. Central Bank raised its key interest rates by 25 basis points, bringing the figure to the highest level in 22 years, but with little info on the Fed's next decision. Our Lee Seung-jae has more.
The U.S. Federal Reserve on Wednesday raised its key interest rates by 25 basis points, putting its lending rate in the 5.25% to 5.5% range. The borrowing rate in the U.S. has now reached its highest level since 2001. The rate hike comes after a rate freeze in the previous FOMC meeting, and despite consumer prices declining for 12 months in a row. Consumer prices have increased just 3% on year, marking the lowest annual inflation rate in more than 2 years. However, the U.S. Fed still feels it's too high and is looking to bring it down to its target of 2%. When asked if a further rate hike is possible at the next FOMC meeting slated for September, Fed Chairman Jerome Powell said such a move is not out of the question.
It is certainly possible that we would raise funds again at the September meeting if the data warranted, and I would also say it's possible that we would choose to hold steady at that meeting.
Powell added that it's too early to tell when the U.S. Central Bank can start cutting its rates, but stressed that the U.S. Fed no longer expects a recession to occur due to the rate increases. However, economists in South Korea are watching closely how the latest rate hike by the U.S. Fed might impact South Korea, as the rate gap between the two countries now stands at 1.75 to 2 percentage points. The Bank of Korea froze its rate at 3.5% earlier this month. A higher rate gap could mean money outflows from Asia's fourth largest economy, which could ultimately weaken the local currency against the greenback, while putting upward pressure on inflation by making imports more expensive. Lee Seung-jae, Arirang News.